This video is on Personal Finance Chapter 3, and the topic of Personal Finance Chapter 3 is preparing for your taxes. So that, the saying goes, there's only two sure things in life. One is death and the other is paying taxes. So we all have to prepare for it and kind of understand it. Basically, we have different tax statuses that we have to pay, and we are in a marginal type of a tax rate system in the United States, where the more you make, the higher the tax bracket you pay. So if you're lower income, you obviously pay a lower, sometimes 0% tax up to 15%. Then it goes to the next bracket and then the highest. And sometimes those percentages change depending on tax laws. But you want to know, as you're getting a job or you have a job, always make sure you understand how you're setting up your withholdings out of your paychecks. So that goes back to how you file. So if you're unmarried, you should be single. There's also a married tax status, and then you could do married filing separately, in which case you should just file. When you're setting up your exemptions at work, you should just say you're single, because you are just basically filing a individual tax return by yourself. And then there can be head of the household, so you're not married but you have kids. But if you want to have more withheld, you would go single and 0 exemptions would be the most withholdings that your employer is going to take. If you're married, I'm married and I have 3 kids, I still go married and 0 exemptions because it withholds more money. I'm not a person that thinks, okay, I want that huge refund, but I also want to make sure I don't owe. So that's why I do that, just to be safe. But definitely if you're single and you don't have any exemptions and you don't really have any credits to take, you should definitely make sure you're single and 0 when you're setting up your withholdings for your employer. Your take-home pay, it talks about, is after all your withholdings. So if you've had jobs, I'm sure you realize as you open your paycheck, it's not what your gross pay is, but you're going to have a variety of withholdings come out. If you guys are CCP students and you've never had a job, just know that when you get your first job, you'll always have an hourly rate times the hours that you get paid, but then you got to take out your taxes. So there'll be federal withholding taxes, there will be FICA withholding taxes, there'll be state taxes, and there could be local income taxes depending on where you work. So you have to factor all of those things in. As you get higher level jobs and get more benefits, then there's things that can be adjustments to your gross income. So if you pay into your 401k or a retirement plan that your work offers, those monies will go in pre-tax, so before any tax comes out. So it'll reduce your taxable income by the amount you put in there. Also, if you pay health insurance, your portion of the health insurance, those will also come out pre-tax. So it reduces your taxable income and you don't have to pay tax on that money. There's also some other different, like there's Section 125s where you can have amounts that you're going to set aside for child care that will come out pre-tax. And if you're making like health payments, like if you go to the doctor and the part that you have to pay, you can set those aside in like a health savings account, and those can be tax-free up to a certain dollar amount. So as you get a little more complex in your taxes, think about all those things because they can help you save the amount that you have to pay the IRS. It talks about standard deductions and itemizing. And with the new tax law changes that took effect this past tax year, it makes it very difficult for people to itemize. A single standard deduction is now $12,000. Married is $24,000 a year. So you have to accumulate enough deductions to get to that amount, and that is actually very hard, especially the married $24,000. There are things you can that can go towards that, such as your interest that you pay on your mortgage, your property taxes, if you pay state and local income taxes, but still to have those total up to either $12,000 or $24,000, it's a lot. So you're probably just looking at your standard deduction for the majority of us. And then there are some different tax credits. You get tax credits for your kids. You can get tax credits for paying for college, whether it's for yourself or for your kids. Sometimes there's tax credits for home improvements that are energy savers, like new windows or new doors. So those kind of come and go, so you have to check on those. So those are things, though, to kind of maybe do a little research on, take advantage of whatever those tax credits are, and definitely if you have those expenses, make sure you're taking them. The textbook gives you a nice little scenario of a couple, and they go through their tax return, and that's a nice thing to kind of look at, especially maybe for those of you younger people who have never filled out a tax return. Actually look that over and kind of see how that works. That should kind of give you a nice example. Then there can be unique scenarios, like maybe you need an extension. Maybe you're not ready to file on April 15th. So you can file an extension. You're supposed to pay the IRS what you estimate you would owe. Sometimes that's hard because you haven't filed your taxes yet, so you don't really know. But then you should give them some sort of an estimate. And then that gives you out until October 15th to actually file your tax return. You could file and then have something come up, like maybe you got a tax document that you didn't realize was coming, and then you have to do an amended tax return. And then there's really no charge for that. You just have to correct it. And then people always worry, oh gosh, what if I get audited? Like the textbook says, it's like less than 1% of the people will be audited, and the audits aren't that horrible. I'm a CPA, so I do some accounting on the side, and my nephew did get audited. He had a very unique self-employment income. He was a racer. He raced ATVs. So it's just a whole different type of industry, and it was considered self-employed, but he had a lot of different income streams, and there was a specific income stream that he was receiving parts, and we didn't record that. So there can be strange things. So then in that case, they did audit us and he did end up owing. But sometimes people can get audited and they'll even find you deductions that you didn't know to take. So it's not always a scary, horrible thing. And normally sometimes they'll just send you a letter and you have to provide proof to them. Sometimes you go into their offices and to provide the proof. When your tax returns get, as you're young and you just have, like, say 1 or 2 W-2s, you could do those yourself. There's all kinds of online free filing sites for that type of a taxpayer. As they get more complex, you could hire a taxpayer, you could hire a CPA, you can do it yourself through tax software like TurboTax. Or TaxSlayer. There's different ones you could purchase and use. And they make it real easy. They walk you through the steps, they ask you questions, you put in your information, and then you can even e-file it that way. Then as it gets into it, there's more some like tax planning. Again, those are going to be higher level thoughts. If you're getting into, like thinking about, well, I've got a job, I've got kids, like what can I do to kind of reduce that taxable income? More money into your retirement account is one way to do it. College funds for your kids. You could invest in state and local bonds where the interest is not taxable to you. You could set up trusts for your kids to kind of transfer some of the assets over to them. So there's a variety of different ways. Again, if you're in that kind of that higher tax bracket that you want to try to take advantage of those deductions and kind of move money around so it's not taxable to you but taxable to your children. So they give you some different avenues. But I think the main gist of it is just to understand how the tax process works, how we file, that that there's withholdings, and that sometimes we can kind of do different things to decrease the amount of taxes that we have to pay to the IRS. So that is pretty much it for that chapter in personal finance.